Hello and welcome back to another Trade for a Living Trader's Tip. Today we're getting into Trader Tip number 10, and we're going to answer the question, what drives the price of a stock? To start this discussion, I'm going to ask you, what do you think drives the price of a stock? You know, stocks change price all the time. What do you think's driving it? Do you think maybe it's something like A, the leadership? Maybe the earnings or the profit? Or maybe you think it's something else? You know, each of you have an idea, and you may be somewhat right, or you may be surprised at the answer. But culture is kind of culturally driven to expect that it's going to be one of these things or a combination of all of these things: leadership, earnings, profits. What they're really conditioned to believe is it's what we would call the fundamentals. What are the fundamentals? Well, it's things like leadership, earnings, profit, all the stuff that gets announced on the earnings dates. But here's the challenge. It doesn't play out that way. Let's think through this a minute. If fundamentals were really the driving factor, if fundamentals were truly the king of what drove the price of the stock, then in theory, we would have price action that looked like this. It would be more of a stair-step price action. And so you have like an earnings announcement, we'll call it Q1 earnings come out. The stock revalues really fast, and as it reaches its new valuation, it just kind of stays flat right there. Then we get Q2 earnings. They come out, stock revalues real fast, and it just kind of stays flat. And then Q3 earnings come out, and stock maybe was a little overvalued, so it comes down a little bit here. In theory, that's the way it would work, and everybody kind of thinks it should work that way. Ask yourself, for example, have you ever held a stock, pick a stock, Google, and one day you wake up and your Google shares are down $20 a share, and you're looking at it and you're like, oh my goodness, why are my shares down so much? And so, of course, you go straight to Google, why are my Google shares down, right? And then there's no news. There's nothing to support why your shares are down $20 a share. Then you think, oh, it's Google, of course. So you go to Yahoo. So you go, Yahoo, why are my Google shares down, $20 a share? And there's nothing there. And you search, and there's nothing there to support the fact that your shares are down so far in one day. And then you get home and you talk to your spouse about it, and your spouse says, why are you so discouraged today? And you say to your spouse, well, my Google shares are down $20, and I've spent all day looking for a reason, and there's just no reason why my shares are down. Can you identify with that type of a story? Everybody's kind of ingrained to expect that that's reality. Unless something major comes out, the stock should stay the same price or go higher. But it's not the reality. In reality, stocks don't move in stair steps. Instead, stocks go up and they go down, and they do it constantly. And sometimes they run up ahead of earnings. Sometimes they run down behind earnings or ahead of earnings. And it doesn't make any sense at all. That's why so many people say that the stock market is random. That's why so many people say you can't predict what's going to happen in the stock market. Because if you're looking at the stock market through the goggles of fundamentals driving the market, you're always going to be disappointed, because fundamentals are not king. I'm not saying that fundamentals aren't important. I'm not saying that the information that's released over an earnings date, it does not have some impact. It does have an impact, but that information gets assimilated very, very quickly. And so if the information is assimilated very quickly, but then the price starts to continue to move, what is there to blame for this erratic price action where the stock runs up and it pulls down, it runs up and down and up and down and up and down and way up here and then back down here? What is it to blame for all this erratic price action? And the answer is really straightforward. It's simple speculation. Speculation. Everybody has access to the same information. Everybody knows what the earnings announcement was, yet different people react differently. Let's take a look at a very well-known stock, for example, Caterpillar here. Take a look at Caterpillar. And back in October, Caterpillar announced the best earnings that you could imagine. They blew earnings away. They did better than they anticipated. They beat all the estimates, and the stock gaps up for just a little bit. But in less than a month, the stock runs up a little bit, and before you know it, it reverses, and it runs all the way down into the January earnings, And after the January earnings, when it was actually kind of some negative news, it stabilizes here. What is it to justify the fact that post some of the best earnings they'd announced, the stock didn't run up to new higher highs, but instead we started to establish more of actually a bit of a downtrend here? If you take a note of how this is going, look, you can actually draw a line and say, I'm starting to get a bit of a downtrend, as the stock is actually making lower highs consistently. And then if you were to draw another line in here, you can see, wow, this downtrend is really starting to take off at a new steeper angle, one I do not want. Now, what would justify such a move? The answer is nothing that's found in the earnings announcement, nothing that's found in the fundamentals. The fundamentals were good. But here's what justifies it. People who are looking at that information all interpret it differently. And so one person starts to look at it and says, well, gosh, these were great earnings. The stock's going to run up. Somebody else looks at it, interprets the information differently. And when the majority of market participants start to lean one way or the other, regardless of if it makes sense or not, that information starts to drive the price of this trade down. And so here's what the evidence suggests. The evidence suggests that markets are anything but efficient. Rather, they're completely determined by, you ready for this? The irrational optimism or the irrational pessimism of the individual traders, which lead the trader to buy or sell. If you can start to understand that, then now what we're doing is we're putting a different perspective on. We're getting a different set of lenses, a new way to look at the market. Most people look at price action and they say markets go up or markets go down simply because of the fundamentals. But the technical trader looks at it and they recognize that the real driving factor of the market is human speculation. It's the sentiment, the irrational optimism or pessimism that ultimately leads the trader to buy and sell, even if it doesn't make sense. And if you can understand that, it will unlock an entirely different world to understanding price action and why stocks run up and why stocks run down and why sometimes it seems completely irrational. But if you learn to look at it through that perspective, you're going to find that there's actually quite a bit of reason to it and quite a bit of rationality to it. Now, if this is interesting to you, if you say, wow, that's cool, I want to learn more, guess what? We've got some more to share with you. You can watch more of these trader tips. We're going to share a lot more of these ideas of technical analysis here in these traders tips. Or if you want to just kind of, fast track it here, why don't you head on over to TradeSmartU.com and get an all-access membership to TradeSmartU.com where you can have access to hundreds of hours worth of training, all available on demand on every subject you can possibly imagine that you would want to learn about. Everything you need to know about technical trading, stock options, stocks, everything about that, it's all available on demand immediately, all for one monthly price. So go ahead and go on over to TradeSmartU.com, www.TradeSmartU.com, and check it out. Sign up for membership, sign up for a trial there. If you like this video, share it with some of your friends, pass it around a little bit, maybe rewatch it a couple of times. And until we meet again, happy trading.